Let me welcome in for an extended conversation here Mr. KP Nair of IDBI Bank, who's joining us to give us a little bit more clarity. Very good morning to you, Mr. Nair. Thank you so much for taking the time. This is Ira from the Bombay studios. Mr. Nair, my first question to you is exactly that. We've already seen banks, report elevated NPAs. In your case, almost 25% of the loan book. And on top of that, now you have to deal with the new stressed asset circular, which came in February. Even if you can't give us numbers, qualitatively, sir, can you tell us how that is going to impact you?
Good morning, Ira. Yes, the numbers that you mentioned are correct, and that yes, our GNPA stands at marginally below 25%, as you would have noticed at the close of the last quarter. Yes, it's true that the circular on February 12th will have an impact on that going forward. But then that's something which we have obviously, as you said, we will not be able to mention any numbers, but there is going to be some impact of that that will be seen during the current quarter.
Ms. Nair, so can you just explain to us exactly what happens? Are all the assets which are in the S4A and SDR buckets going to get marked down into NPA, or is it the ones where the process had not been fully completed and banks hadn't signed off on the actual resolution under those schemes?
No, see, all of them need not necessarily get marked down as NPAs. So there is this particular circular very clearly states that the SDR and S4A and 5/25, while all of those schemes actually stand withdrawn, but some of these resolution plans, let's presume some of these would have already been completed. Some others which are under implementation, actually, they are also able to meet the parameters which have been laid down under the circular. So if those parameters are fulfilled, in that case, there is no reason that these will get downgraded or will get quantified as NPA. So that will not happen. But there are a few cases which are under implementation, but which will not actually be able to meet the guidelines which have been laid down under the circular of February 12th. So those actually will need to get downgraded, and then there is a period of 180 days during which the new RP will have to be formulated or the existing RP continues.
So what is, as the disclosed numbers stand on December, what is the amount under SDR, S4A and 525? I think the numbers put out by my research colleague Shraddha Babla suggest that it could be almost close to 20,000 crore.
All of these, many of these numbers, actually, the numbers don't have too much of relevance, I would say, at this stage, because the ones which are, as I mentioned, the ones which have already been implemented, then those projects will continue. Those resolution plans do continue as they are. Of course, subject to the new guidelines, in the sense that the guidelines which have come relating to, upgradation of the asset or the default clause that will happen. So those will come into play insofar as these assets are also concerned. But what concerns is actually, as Ira, you mentioned earlier, is basically those cases which were under implementation where, let us say, the standstill period had been invoked, and where that particular provision is no longer applicable.
Okay, understood that, sir. Sir, on the provision front, I think the RBI seems to have given a little bit of relief from what we understand on the NCLT cases, allowing provision up to 40% as compared to 50% earlier on the secured part, sir. Does that have potential to provide relief to you?
Yes, obviously that will provide a relief, and not only to us, it will provide a relief to almost most of the major lenders who have a large number of cases which have been referred to NCLT. So that particular provision, this circular provides a relief to us for the current quarter.
Okay. Did you have provisions in
sorry,
excess of 50%?
I shouldn't say the current quarter. Actually, we are in the Q1 of... Pardon?
No, so I was just wondering whether you had provisions in excess of 50% on the NCLT cases until Q3, which would allow you to write back some of those provisions, sir?
No, we are not really looking at write back of the provisions. Yes, wherever we had a provision of either above 50% or 50% or more than 40%, which is what is now warranted, yes, that relief will be available.
Okay. But sir, would it be fair, and this is, industry, but also you, would it be fair to say that Q4 will see higher NPA numbers and higher provision numbers, sir?
Q4 will see provision numbers. I won't really comment on numbers, as it's obvious that one can't comment on in numbers. But yes, Q4 will certainly see some provisions coming out of FT NPAs, as also the aging provisions.
And NPA numbers, sir, as percentage as well, would it be fair to assume that they are set to rise even from current levels?
I wouldn't really comment on that, Era. That's not really, would not be appropriate.
Okay, understood that, sir. So can you help me understand what has been the progress in recovery? I mean, in your case, the problem is the large, corporate accounts, and we're all watching what's happening to the NCLT process. Can you share your thoughts on how you see that process going on, and any cases which are outside the NCLT, whether you're having much progress in actually, pushing up the recoveries and upgrades, sir?
So, see, as far as a lender like IDBI Bank is concerned, a good number of cases are in NCLT for us. See, as far as our overall loan book is concerned, a significant portion, as you're aware, is obviously to corporate accounts, which is roughly, we have something like today 70% of our overall loan book would still be, as far as the NPAs are concerned, would still be the corporate loan book. Of this, a very large percentage it has already been referred to NCLT, and part of it is again under reference to NCLT. So NCLT resolutions going forward will be a very, very large cornerstone insofar as the overall resolution of NPAs is concerned for IDBI Bank. As you asked, as you are also aware, in the last financial year, while a lot of progress has been made insofar as referring the cases to NCLT, and a lot of progress has been achieved under the ambit of NCLT, actual resolutions have happened to a few cases alone. And we expect a lot more resolutions to happen going forward in Q1 and Q2 of the current financial year. So we will going forward see a good number of resolutions out of our overall NPAs happening through the NCLT process in 18-19, as also in 19-20 to a larger, to a smaller extent as compared to the current financial year. As I said, since a good number of our accounts and a good percentage is already under NCLT, so while the other areas such as enforcement actions that we take, as also sale to ARCs and all of that, that continues to happen, and that will also account for the balance portion.
Sir, on the NCLT cases, I have two questions. I'll club them together. One is, I know we've seen a lot of interest in the steel assets, and, a lot has been said about that. But there are other assets, even in the first list of 12, where the interest has not been that high. Would you be able to give us a sense of what kind of, haircuts you expect on steel versus non-steel assets? Even a rough range. I mean, is it, 50%? Is it 80% on the non-steel assets? And on the steel assets, is it much lower?
You've seen the numbers that have so far come by and large on the steel assets, because that's where some kind of sense of resolution is visible right now. And I would only say that on the steel assets, actually the numbers look far more encouraging than on any other category. And perhaps the amount of haircut, I mean, so far the numbers that we have been seeing are somewhere in the range of between 50% to 60% resolutions. So obviously the haircuts will be lower in case of steel assets. But as far as the other assets are concerned, like you've seen, a lot of interest is there in a cement asset where haircut chances are zero. There is also some interest which is seen in other cases where there are good underlying assets. But in respect of the other cases, I think at this stage, all that we can say is that the haircuts are likely to be larger. But the exact numbers, I think it's too early to quantify.
Sure. So, a question on the timeline. I know you said that 2018-19 should see resolutions, and going by the stated timelines, it probably will. But there's a little bit of concern that this process is getting stretched out. There was some talk that the litigation time would be taken out of the 270-day period put in by the IBC, which could then make this a fairly lengthy process. What are you hearing from the lawyers, and what is your sense on the probability of this process getting stretched out beyond the 270-day period, sir?
We haven't really heard anything specific on this as yet. But yes, what you say is in a way true, that the process is actually getting a little constrained because of litigations. And we have seen some of that happening in larger cases, and it's still ongoing. So while as far as the lenders are concerned, it would still be helpful if you are able to contain the process within the overall deadline of 270 days. But at the other hand, if the legal litigations do go on for very long periods of time, if it becomes absolutely necessary that some amount of leeway be given, that would certainly help the lenders.
So let me just switch focus to another aspect, and that is, fairly active efforts at the bank to try and unlock capital. I think the last deal that went through was a BKC property, which I think Times of India reported was about 900 crore. Can you give us a sense of how much you have managed to unlock through these various non-core asset sales and, say, property sales, etc., sir?
See, overall, actually, including the deal that you mentioned, we have been able to unlock close to about 4,000 crores or so.
That's a good number. And you still have, other assets.
Which is, of course, consisting of various deals.
And you still have other assets that you're sitting on now?
We have a few other assets. Yes, we do have not too many. We have a few other assets. I think you are also aware of a couple of other deals which are currently in the pipeline, where we expect to see some resolutions happening going forward in Q1 of the current year. So that effort continues, and I think we will probably see, most of the assets that we have identified for divestment happening during 2018-19, certainly.
Okay. And so what is the strategy on the lending side now? I mean, by virtue of being under prompt corrective action, I know that there are restrictions on the, the segments you can lend to. Is there a restriction on the overall loan book growth? Should we expect the IDBI loan book to actually fall, sir?
See, the IDBI loan book, we are not actually saying that, we are containing our lending. What we are trying to do, and what we have, I think, successfully achieved in 17-18 also to a large extent, is basically to ensure that our risk-weighted assets are brought down to a level at which we are comfortable, and where we are sure that we can manage our capital requirements properly. So the efforts which have been ongoing ever since 2017-18 beginning, which will continue now also, is to ensure that our lending is to a better rated asset, and where the risk weighted or the risk weights are actually lower than the other asset classes. Obviously, with this strategy also implies that we would be concentrating more on increasing our exposure to the retail book, as also to the priority sector loans, as compared to corporate lending.
Okay, but you won't degrow the loan book, sir?
See, the loan book will, I would say, to an extent degrow on its own because of all these resolutions that are happening. As also, as I said, since the effort will be to grow only in better class of assets, so therefore there will be, to an extent, there will be a reduction. That is likely to happen, and that is actually in keeping with the overall strategy of the bank with regard to capital augmentation.
Okay. So last question to you. There was a report in the Economic Times suggesting that the RBI has raised some concerns about the health of the bank written to the government. Have you had any interactions with the RBI or the government specific to the bank's position right now, sir?
No, Ira, not on this particular matter. We, of course, continue to have regular interactions with the regulator with regard to various matters, as also routine quarterly meetings that we have. And the same is the case with the government also, but not specifically in this matter.
All right, Mr. Nair, thank you so much. Very kind of you to take all of our questions patiently, helping us understand the position of the bank.